Hey everyone, good morning. Chris here from SportsFX. Just to give you a quick market update on what happened last week and how that affected the currency markets, along with the important announcements coming up this week to see what's happening. And what to be aware of if you're earning an overseas, salary, prize money, or you just have money overseas that you need to move back home. So look, I'll share my screen here and we'll jump into some of the charts to begin with, just to give you a good visual of what we're looking at. So starting with the Aussie to the US, so that's seen a sell-off there of about 2 cents for the week. Now with that, we sort of started up around 63 cents, got as low as about 61, 2%, not 2 cents for the week, but 2% overall. As you can see there, as we came through, we had a sort of started, we gapped down on Monday morning after the weekend, came back up, sort of retested the 63 cent mark and then just sold off for the rest of the week. CPI figures there in the middle of the week didn't help. So what happened there was they came in less than expected. Now what that means is the knock-on effect of that is that the RBA will look to cut interest rates at their next meeting, which is in the middle of February. Now how this affects the currencies is, while it's good for mortgage holders for an interest rate to be cut and your mortgage payments to go down, if you're investing or you have money in savings, obviously the interest rate comes down as well. So you're going to get less for your money that you have sitting here trying to work for you. So what generally happens is you'll find that, investors or large sums of money will leave the country and look for a higher yield somewhere else. So generally what you'll find is when an interest rate gets cut in the country, the currency goes down, and even the expectation of that now has started to put a bit of pressure on the Australian dollar. Then towards the end of the week, even though we started to regain a little bit of ground late on Friday, the tariffs announced by Donald Trump on Friday night, our time, I've seen a huge sell-off again right into the end of the week and back to that sort of 62 cent mark. So overall, not a very good week holding Australian dollars. If you have a look, the Euro chart looks very similar. So if you have a quick look there, you can see started the week, sort of gapped down instantly and just made a slow movement down throughout the week. Sort of recovered a little bit towards late Friday. That was even with the European Central Bank cutting their interest rates. That was priced in, so it didn't have the effect it probably should have. Off the back of that, you're back below 60 cents. So if you've got Australian dollars, and we've got a post coming out this week around the Australian Open and the tennis. The players who'd won their prize money didn't get paid for 3, 4, 5 days after the tournament ended. They've potentially lost out on, 1 cent for every dollar that they need to send back to their home country. So Yannick Sinner, for an example, as the winner, 3.5 million Australian dollars, potentially $35,000 worse off if the payment hadn't been made till late in the week. So that's how it can sort of affect people. And obviously with him earning something ridiculous like $10 million last year, he probably won't miss 35,000. But this can affect everyone. Doesn't matter how much money you're earning or where you're earning it when it goes home. There's definitely better ways around making that work for you. So as you can see there, Aussie Euro, which for Sinner being Italian, that would be the main thing he'd be looking at. And, it's the same with the US, as I said. And if you look at the pound Aussie, which we have a lot of clients dealing in pound into Australian dollars, that had the other effect. So obviously, with the Aussie selling off, the pound increased in value. Again, the arrow with the CPI figures gave it a big jump, and it's just sort of settled towards the end of the week. So yeah, overall, nothing looking fantastic, to be honest, if you're holding Australian dollars right now. The other sort of couple of key announcements that we looked at last week were this. We've got the European Central Bank, as I said, they cut rates towards the end of the week. It was on Thursday night. Federal Reserve, they kept rates steady in the US. The Bank of England will meet this week to talk about their interest rate decision and what's expected, along with the Reserve Bank of Australia, but that's not, as I said, until about the second week in February. We do, however, on Monday have retail sales coming out of Australia, so you would hope that you see a better than expected result, but given the state of everything that's happening at the moment, that might be another bad economic result we see and a further sell-off in the Australian dollar. Next week, so that was last week, coming into this week, and what we've been looking at is Trump's tariffs. I think that's going to be the biggest driver, outside of individual announcements, is what you find in the currency markets is when there's uncertainty, there's volatility. And with these tariffs coming in on China, Canada, Mexico, the impact is probably more than anything is uncertainty on what's going to happen between the countries, what kind of trade war they're going to get into, and how that's going to affect everyone's economy. Obviously, for us here in Australia or people holding Australian dollars, the impact of China, which has a knock-on effect to us, is the most important one for us to look at. Canada and Mexico, they'll have their own issues with their currencies, but unless you're earning or dealing in those currencies, it probably won't affect you as much. So that's the sort of main thing that I think is going to be just the overarching driver or issue that we see coming into this week, and depending, as I said, on the currency that you're holding. Going back to to the charts itself, if you're holding US dollars or you're holding pounds or you're holding euros, again, it's still a very positive time to take advantage of this weakness in the Australian dollar. A couple of key things, just to be aware of. One is forward contracts. So meaning that, while the rates are they're close to a 20-year high if you're holding US dollars to Australian dollars at the moment, give or take a couple of areas through, the GFC, COVID, and the likes, it's not very often that you see them, this high. If I have a quick look here and sort of draw it out, and drag out the charts all the way back to sort of 2007, we're very close to the high. This peak here, that was during COVID, and that's when it went crazy. This was the GFC. So as you can see, we're at multi-year, 10, 15, almost 20-year highs if you're holding US dollars to move them back into Australian dollars. So that's something you can chat to us about. Recently, we have done a couple of these where we've got clients now that have booked in the exchange rate for the next 12 months. So while they're overseas earning US dollars, their exchange rate is locked in for them at around that $1.60 mark. For them, gives them peace of mind that they've locked in a long-term exchange rate. They can just focus on playing the sports that they play and not having to worry about what Trump and Elon Musk are doing, how many tweets are going out, and how that's going to affect the markets and essentially their earnings. So very, very important. So that's that one. And that's probably the key for this week, is looking at, all right, what have we got coming up? As I said, retail sales. So that'll come out on Monday. From there, Tuesday, a bit of data out of the US. Wednesday, you've got employment figures out of New Zealand. And then Thursday is the big one for the pound. So the monetary policy statement and interest rate decision out of the UK is the key one. And then outside of that, we've got more employment figures out of the UK and Canada, and then US employment figures to finish off the week. So there's a lot of high tier data which can affect, what we're going to see in the currency markets. But the main overarching, issue or concern are going to be these tariffs and the replies and responses from Canada, Mexico, China, and what knock-on effect that has to the rest of the currencies. So as always, feel free to reach out to me. You can reach me at sportsfx.com.au. We're on LinkedIn, Instagram, Twitter, all these places. Or just, make a comment below in the YouTube video. Thanks very much. And if we can assist at all, please let us know.